the International Monetary Fund has approved a $2.34 billion finance package for Kenya. In an emailed statement over the weekend, the Washington-based lender said the approval of the so-called Extended Credit Facility and Extended Fund Facility will enable immediate disbursement of assistance to the East African nation. Joining us to discuss this further, what the funds will be used for, how they impact Kenya's economy, is Johnson Nderi, who's the manager, corporate finance and advisory at ABC Capital Limited. Johnson, you're welcome. Thank you so much for joining us. Great to have you. What will the funds be utilized for?
So we're looking at the communique from IMF and government, and essentially it looks like it's going to be supporting existing budget. Mostly that's debt payment, if I remember correctly, and of course meeting government's day-to-day obligations.
Great stuff. We were just talking about SMEs in South Africa not too long ago and how required reforms haven't really followed through to help them. Do you think these funds will be effectively utilized in Kenya?
If we're looking at SMEs, I think the problem for SMEs in Kenya has not necessarily been funding. I think banks do a good job here, and good SME investors networks established. What I think SMEs in Kenya need more than anything is reform with regards to regulations, because that's what makes it tougher for SMEs to thrive in Kenya. If that can be resolved, I think we would see a more robust SME sector and more robust employment in the country.
Great stuff. So do you expect this $2.3 billion that's being deployed, do you expect the impact of the funds to be felt in Kenya?
It's hard to say. I think the test for this will be if Kenya does not experience a macroeconomic event, a credit event, then we will say that the funds worked. But in a positive sense, in terms of growth beyond what we are seeing today, it's unlikely that we will see that kind of impact.
All right. Now, Kenya's economy contracted by, I think, 0.1% in 2020. Not as bad as initially expected. What sectors of Kenya's economy is the nation dependent on to do well going forward? How do you see things?
Well, so we still rely largely on our agricultural sector. Horticulture has come through for us, and we expect that to continue going forward. Tea, coffee, avocado, macadamia, those are emergent areas where we are seeing growth in agriculture. I think manufacturing will still remain tough. Stable power, though, should help in that regard. Services sector also should be okay. I think, except for, of course, logistics and tourism, which will be severely impacted by this pandemic.
Great stuff. Now, Kenya's GDP is projected to expand by 7.6% this year. 5.7% next year. Are those projections in line with your outlook at ABC Capital?
You will find that a lot of people disagree with that sort of forecast.
That's why I asked you exactly. So please go ahead. Tell us.
It looks on the higher side. We are going to see a little lower than that, and that's one of the areas. One of the reasons for that is because fiscal space for government is greatly diminished thanks to growing debt burden. In the recent past, we've seen a lot of growth as a result of government, public sector, public works, investments and things like that. But that is diminishing with the growing debt, and that's one of the areas that I think IMF has highlighted, and everybody around here thinks that will be critical going forward is how we manage our debt, how we manage our deficits. Deficits need to come down to give the government fiscal space and to even give private sector operating space. Otherwise, we've seen 3 or 4 years of continuously raising higher taxes and higher tax rates. And at some point that dam will crack. So we want, if we don't bring the deficit under control, if we don't bring our debt under control, it'll become a source of serious weakness going forward.
Great stuff. The IMF says Kenya's debt remains sustainable, but it's at risk of high debt distress. Also, the Director General of the World Trade Organization, Dr. Ngozi Okonjo-Iweala, has called for debt relief for emerging markets. Well, what do you make? You just mentioned debt just now. What do you make of the call for emerging, developed economies to give emerging markets debt relief, to give them some room to grow?
I think this will be the second round. The first round, Kenya did not benefit from debt relief. But our neighbors did. So I think, and we seem to be, as a region, rushing back to, that same. So we need to figure out how we can arrest this issue once and for all. But debt certainly is a concern. I think this year will probably be consuming at least, one debt service alone will be consuming at least 1/3 of revenues collected, and that's not a pretty number. So it's actually more than 1/3 and rising. So debt management is certainly a concern for us. Should we get benefit? Should we be pushing for debt relief? I'm not so sure, because that's a political issue as well. But if we do benefit from debt relief, I think that will give us a lot of breathing space.
Great. So President Kenyatta has recently announced new lockdowns in Nairobi. Can you briefly tell us if there's going to be an adverse impact from these latest lockdowns?
Most certainly. The impact will certainly be felt in logistics and businesses that rely a lot on logistics, on the hospitality industry, to restaurants. Those now have been refused to accept, to normal operations, have been severely impacted. Hotels, so those ones will, and those are significant areas in our economy. So that can easily shed off maybe 100 to 200 basis points of growth.
Interesting stuff. Well, we'll be looking and seeing how things progress in East Africa's largest economy, Kenya. Johnson Nderi, Manager, Corporate Finance and Advisory, ABC Capital Limited. Thank you so much for joining us. We appreciate your insights.